Well, I think the Chancellor didn't have much choice really in that there's such a huge budget deficit that's built up in recent years, with the latest year just showing a deficit of £150 billion. Now, that means that the government's expenditure totaled £525 billion. Its income was only 375, so that's quite a deficit. So clearly some tough action was required. And I think in many ways the action that's been taken is not quite as bad as we expected, where we did actually expect to see some fairly substantial increases in CGT and also VAT. There is a danger that the public sector cutbacks could actually have an adverse effect on the private sector, because the private sector in many cases relies on work and contracts that come out and are funded by the public sector in areas like education, health, assisted housing schemes. A number of our clients in recent years have generated some good revenues from those sort of contracts, and they may be at risk going forward. I guess it's hoped that the public or the private sector expenditure in terms of housing, the housing market would pick up generally to alleviate some of that pressure. There's been quite a few positive things retained from the previous budget, because remember this is an emergency budget, and the previous budget by the previous government was only a few weeks earlier. There's three key areas really for businesses in terms of funding that have been retained there. The first one is the Enterprise Finance Guarantee Scheme, which allows businesses to borrow up to £1 million, where 75% of those borrowings are guaranteed by the government. That's been retained, and that's good news because we've known a number of our clients to actually use that scheme. Also, the Capital Growth Scheme, that's been retained, which is a sort of private equity type scheme where the government helps to alleviate the funding gap for growing companies. That's been retained. And also a number of other areas and initiatives to help businesses grow in the early stages, they've been retained as well. So I think that's a good sign, good positive sign for small businesses. From a personal tax point of view, a couple of good things have been retained from the previous budget. The first of which is the ISA allowance, which was increased to £10,200. That's been retained, and that allows savers to receive income tax-free each year, and that's been a very valuable retirement planning tool for a number of people. And the other one also is the stamp duty. The threshold for stamp duty for first-time buyers of purchases, properties, doesn't actually kick in until £250,000. That's been retained as well. So hopefully good news for the housing market there. Really, the capital gains tax area was probably the most encouraging and the best news in the budget for business owners that we saw. We were expecting quite a substantial increase in capital gains tax leading up to the budget. There was a lot of speculation about that. But the actual result is that capital gains tax increases for higher rate taxpayers only to 28%. So it's still much lower than the highest rate of tax, which of course will be 50%. Now, the rate is one thing, but also the really good news for entrepreneurs is the fact that the entrepreneurs' relief, which used to be £1 million, which meant that people with business who had businesses or shares in a business or sole traders could sell their business and only paid 10% capital gains tax on the first £1 million of any gain. That's actually been increased to £5 million. Now that's great news, and that really does encourage people to retain profits in their business that would perhaps otherwise be taxed as at higher rate tax if they took it out as salary or dividends. And that really encourages them to build up the balance sheet within their business, that longer term they may be able to buy back, reduce their capital or sell their business on, and only pay 10% capital gains tax on that first £5 million. So a really good bit of legislation there, good news for business owners, and will encourage them to grow their businesses and retain profits within them. So we do like that one in particular. The tax-free personal allowance has actually increased quite substantially as a result of the budget. It's actually gone up to 7,475. So and nobody will pay tax on any income until it exceeds that level. There's a longer term commitment to actually increase that to 10,000 a year in the foreseeable future. So that's a good sort of indication there in terms of the government's ability to help the lower paid people. Again, corporation tax rates are coming down, we're pleased to say. The main rate of corporation tax, which is currently 28% for larger companies with profits of £1.5 million a year or more, that's going to reduce to 24% over the next 4 years, so gradual reductions there. But the vast majority of companies pay the small companies corporation tax rate, which is currently 22%, or was due to go up to 22%. That's been sort of abolished or reduced rather. It's going to go down to 20%. So again, that's good news there for companies that want to retain profits for growth and obviously pay a lower rate of corp tax on the profits going forward. We've still got some big changes to national insurance contributions coming in, and that was announced by the previous government in the budget a few months back, where they were looking to make some sharp increases, 1% increase in fact, on both the employers and the employees' contributions. That's still going to happen to a large extent, although there's some sort of threshold changes that help the employer. And we've looked at some examples for an employee on $25,000 a year. That would actually cost that employer about £190 a year extra in contributions from next April, whilst it will cost the employer about £42 a year increase. So still quite a big tax take, and that's going to pay for a lot of these tax concessions elsewhere, and of course help towards reducing the budget deficit. In terms of capital allowances, these are the tax relief that you get on capital expenditure that a company or unincorporated businesses make. Previously, there was an annual allowance of $100,000 a year, which meant that the first $100,000 a year that any business incurred capital expenditure on would be fully tax deductible, 100% write-off. Now that threshold is now going to be reduced to $25,000 a year, so obviously a bit of bad news there. But that's got to be looked at in the context of the fact that the average company, or rather 97% of companies, spend $50,000 a year or less on capital expenditure, so it shouldn't have a major effect really.